It's Friday, January 22nd, and of course, this is the video log that takes 30,000 to a million. And after I take you through the account, I want to talk about the misconception that markets always go up, and I want to just shed some perspective on that notion. So I'll see how far I get with that. But first, let's take a look at the account. I'm sitting at 150,809 at the moment. I actually finished at an all-time high of 151,400 or something like that, but there's been some action after hours, I guess 151 and 200 or so, and now my shares have fallen. I'm gonna show you all of my positions on the right here. You can pause the browser at any moment to try to find out my exact positions. And then I want to talk about those markets always go up phenomenon, okay? But first, here's the ticker of my position. This is the strike price here, then the expiration date, number of contracts, whether it's a sell or a buy. And I will quickly scroll through them. You can pause the video at any moment to try to find out all relevant information. The numbers on the right represent the change in liability that the position experienced today as of the closing of Thursday. So I did sell one Apple call, so now I have only two left on today's spike in the share price, and I don't know if that's a good move or not. I may actually rebuy that call at some point if Apple drops substantially, but we'll see if it does. Everything else is fairly neutral in the account, and that's reflected on all the red with the sparkling green numbers every once in a while. Scattered green plus signs. So if you're interested into the account tab, this is what it looks like. I'm sitting on quite a bit of cash right now, $21,000, and I'm using it as collateral, so it's not really just sitting there. These are all my positions sorted by return. Energy fuels is kind of fake because I've sold call options against it, so I'm not gonna get any of that profit. I'm gonna get some premium instead, and I will now sort by equity, meaning my largest positions. There are some positions that are unsellable for me, at least partially, which are Apple, Realty Income, and probably the emerging market dividend fund. So for right now, you'll see that I only have a few losing positions, and they're not really that losing considering all the premium that I've gotten from them. So that is the account. If you want to look at the weekly chart, this is it. Up 3.11%. Monthly 3.45. 3 months 24.62. 1 year 61.97. This is the all-time chart. It's 124%. So I started taking this account pretty seriously on August 28th, 2018. So somewhere around here. And I had no money into the account. I had like just a few $100, and that's why these first few years here look basically just like a straight line, because I just added a few dollars here and there, whatever kind of spare change I had, and then things really started moving when I added some money in there. So that's entertaining enough. Now I want to talk about the notion that markets always go up, and it's certainly true for the US equities. And I think that because we are so fortunate here in the United States, I don't know if you're an international viewer. If you are, let me know. But in the United States, we've happened to have predecessors that have set us on a path of constant growth, a culture of enabling others and yourself to do better for yourself materially, and foster innovation and bring that innovation into real products and make it available to the everyday person. And because of this nature of cultural understanding here, right? I think that's probably the main reason why the wealth in this nation just keeps increasing. But if we look worldwide, outside of the US, and some people never do, there's a whole different story. Wealth generation goes very much in cycles, and if we measure it against something fairly constant like the US dollar, of course, for most of its history, it was tied to gold, and gold is extremely stable. Um, and even though the dollar has been very volatile before, it had, you know, over the 110 or whatever years since the Federal Reserve was enacted, the dollar has lost probably about 98% or something like that of its value. So 50 times. But even considering that, it's fairly stable, and its inflation rate is, at least in the last few decades, has been very stable compared to the rest of the world. And so all the graphs we're going to see are measured in dollars. So just keep that in mind. Obviously, I'm going to be using bar chart, and I'm going to look at some graphs just to illustrate the point that not everywhere, around the world, echoes the U.S. story. All right. So I just want to make some brief points. One, I'm going to go here into the world market chart. Okay, so I'm using barchart.com right now. And I don't know if you can see, but it's sitting at 115. And in 2012, let's say, it was at about 50. So it looks like over the last 10 years, the value of the world markets has increased by more than double. And that sounds okay, right? That sounds good, but it's a little bit of a false picture, because most of that is just US and China, which are kind of the two biggest economies in the world, and mostly the US, really. The US, I think, has probably more market cap than the rest of the world combined. Don't quote me on that, but I think it's true. So I've pulled it out to the max. So I'm going to look at some other ones. Like, if you look at another economy, for example, China, you'll see that it's gone up since 2012 by more than double. It had little tiny mini bubbles along the way. It gives a fairly good dividend yield. And of course, the stock market is a collection of businesses, right? So the collection of businesses, you expect to have some kind of income that you can live off. I think the dividends, by the way, on this website are not very accurate, but that's besides the point. And whether you're renting out housing units, or whether you are manufacturing parts and you're selling them out into the open market, or final products, or you're a farmer or food, whatever. When you have a business, you expect to have income, and after all expenses are paid, then you can live off the rest of it. So that's the whole idea, and the markets are just a combination of whether it's 100 or 500 or more businesses in a specific region. And the earnings, of course, are measured in dollars. And really, if we make a 2% discount, and we measure that per year, and we measure these markets in real terms, you'll see that the gains are really not that big, right? So this world market graph that we just looked at would be fairly flat. I mean, not flat, but wouldn't have much gain, except for the dividends that it's been paying off along the way. Now, I think the dividend numbers here are wrong, so I'm not going to really talk about it that much. But the China and the US are kind of the exception to the rule. I mean, we have this, home country bias, and we like to invest our money into the markets, and we know it's kind of a for sure thing that it's going to go up. We have our retirements in it. Everybody invests in it. Like Warren Buffett just says, "Oh, put the money in the market, and over the very long term, it's going to go up." And that's kind of been the mantra here, and it's accepted as truth. And there is certain truth to that when it comes to U.S. markets, but it's very, very easy for the picture to look differently. So this is China, and because it's been very leaning on tech heavy as of late, and so it's had an accelerating increase of valuation over the last few years, even decade. We got Alibaba and like JD, I don't know, Baidu, whatever, Tencent, all these big Chinese tech companies are pretty much the only rival for the big US tech companies at the moment, and that's what seems to be driving the growth nowadays in market capitalization, really, in value. So let's take a look at another country, right? Shall we? So this is Japan since 1997. Now, if you know anything about Japan's market, you'll know that it hit a peak in I forget what it was, 80 or 81 or something like that. And we are so far down. I don't want to pull up a whole chart, but you can Google it. We're so far down from that peak that it's been, 40 years basically, or 30, was it 89 or 81? I don't know. I don't remember. But anyway, 30, 40 years of no gains. I think even if you add the dividends or anything, you'd still be negative in terms of dollars on your earnings. And that's not in real terms, right? In real terms, you'd be really negative. So really, if you're investing in companies in Japan, you're losing real purchasing power as time goes on. Let's take a look at, so what this graph shows is that since 1996, virtually the same value, right? 1996 was, 25 years ago almost. Okay. We're going to look at Australia. So Australia, I'm going to pull out the max chart. This is what Australia's chart looks like. It had a very flat period between 1997 and 2001, and then a sharp rise in the housing bubble. And then since then, in 2007, 13 years ago, the market's gone from 33 to 25. So a decrease, maybe like 20% or something, decrease. Yes, it's paid dividends, but that's probably offset by the inflation in the dollar. So these numbers sound right to me, even with the payouts. You're losing money, losing purchasing power in the last 13 years in Australia. Mexico, pull it out to the max. Now, Mexico is a very large U.S. trading partner, right? It's a North American country, and it should benefit from having such a strong economy to its northern border. But since peaking out in 2013, it's now sitting at 43 when it was probably 75 or something like that. 2013, it's sitting at the same level as it was in 2006. So in 13 years, no gain in Mexico markets. All the businesses combined in Mexico, or at least the ones that are representative in this index, have had no gain since 2006. So if you like to invest in your own country, this is what you're looking at. Russia, once the other great power of the world, pulling it out to the max, looking at 2011, it's 52, now it's down to $39. I'm not saying it's going to stay, the trend's going to continue, it might go up, but I actually have some Russian shares at the moment. It pays a fairly good dividend, but the bottom line is the valuation is down. For 10 years, it has lost value. So if you're a Russian and you're trying to preserve your purchasing power, you invest in the markets, it's not cutting it for you. Tell you what though, it's way better than holding in the currency. The Russian ruble has seen dramatic declines over the last, ever, since ever I can remember. How about our northern trading partner, Canada? Since peaking out in 2007, Canada is actually down by $3 from 35 to 32. It's been extremely flat. Yes, there's been gyrations up and down, but as it stands right now, if you're trying to protect your purchasing power in Canada by investing in your local market, it hasn't done that good of a job for you. If you're trying to grow your wealth and you invest in this index, it hasn't done that good of a job, right? It's stayed flat. Okay, United Kingdom. How about the great empire, right? The sun never sets in the British Empire. Well, since peaking out in 2007 at $53, it's now sitting at $32.92. I'm sorry, $30.92. So almost half of the value since 2007. How about that? You invest your money into your local great empire, stock market, a combination of its biggest market capitalized, most profitable businesses, and you end up losing over 13 years, close to half of your value of your money by investing in the British market. Isn't that insane? It's virtually at the same level it was in 1997. So now you have 23 years of stagnation in your money if you invested in this index. So how good is it to invest in this index? These are all huge countries, right? These are the main countries in the world, the biggest economies. How about Germany? Let's take a look at Germany. That's a very, very prominent European producer, right? They make BMW, Mercedes, Volkswagen, like a ton of every single good car that comes out in the world, except Aston Martin. Well, even then they borrow parts from them, right? So since 2007, it's been flat, and this is the strongest economy in Europe. So there's Germany for you. Let's take a look at another country, France, right? Maybe not as stuck up as the Germans, perhaps. France is pretty stuck up too. Germans are, I don't know, weird sense of humor. Okay, so we got 2007, same level as 2007, just like Germany, right? 13 years, no return in Europe. Okay, how about we try a different continent, Latin America as a whole. Okay, pull it out to the max. Look at this. Latin America, every country combined there, the biggest economies. I don't know if it's market weighted or however weighted this index, but bottom line is the same level it was in 2006. 13 years, no gain. After peaking out at 2008 at 55.93, the index is sitting at 29.05. It's halved. Actually, it was 60. It's more than halved since 2007. So if you put money in the Latin America, you figure it's a pretty large continent, right? All the average businesses of that country, you'd think it would gain value and grow. But over the course of the last 13 years, all it's managed to do is half your purchasing power if you were to leave your money in the market. So that's not very reliable, is it? It doesn't seem like this market's going up. How about just a very pronounced country in Europe? Okay, Belgium. Same story as France and Germany. Since 2005, it's flat. Peaked out in 2007 at 27. Now it's down to 20. So you've lost in the last 13 years, and you're staying flat in the last 15 years. You haven't gained anything, okay? Nothing. So here's the world market. Europe as a whole. delete some of these. I'm gonna pull it out to the max and see if it works. It doesn't seem like it wants to work. I don't know why it's so slow. I think the website's slow. My internet's like 1 gig per second, so yeah, you heard that right. Okay, here's Europe as a whole, the entire continent, right? Down since October 2007 from 61 to 49. So you've lost 20% of your purchasing power in the last, in the last 13 years. You've lost 20% of what you own by investing into the markets. Americas as a whole, I'm guessing that's including US, or that's probably Latin America, sorry. So that's South America. Since 2008, halved your money. Yeah, Asia Pacific. This is like, China, Taiwan, and Southeast Asia, I think. Let's pull it out to the max and see what we get. This is the max. This is as far as it'll go. Okay, that's fine. It only goes to 2014. But my point is that if you believe that markets always go up, all you got to do is just take a look around the world. And it is true. I mean, from traveling around, I think the single biggest reason as to why US is doing better than the other countries is cultural. I mean, I think that, there are just different cultural priorities in other countries than to be a capitalist. Entrepreneurs are not really celebrated. Nobody praises somebody who's earned their money and somebody who started a business. Everybody just kind of envies them and dislikes them. And it's really tough to be, well off in other countries. So I think for that's probably the main reason. Even though there's a ton of deficiencies in the US when it comes to, monetary policies, the money, rules and regulations, and even cultural challenges, it's even worse in other countries. I mean, can you imagine 40 years, like in the case of Japan, of trying to make money by owning businesses in your own country, okay, and losing purchasing power in 40 years, right? I mean, it's absolutely insane. Can it happen in the US? Sure, it hasn't happened yet since the market's basically opened in the US, but it's certainly a possibility. Anyway, I just wanted to add some perspective and to let you know that the entire world is not growing, right? At least in valuation. Maybe private businesses are, but the public businesses that are part of the financial institutions there, perhaps they're growing in their own currency, but that's irrelevant. You want to measure it with the same measuring stick, right? So if you measure it something stable that inflates about 2% per year, like the US dollar, you'll see that, none of them are growing except China nowadays with tech and the US. Those are the only two economies that are really growing. That's it. So I hope that was helpful and give you some perspective as to what reality looks like and what the rest of the world looks like. And perhaps it will help you think better as to how you control your money and what you're doing. I know this is most of the people that watch this are, into options, or they're on Robinhood or whatever kind of platform, and they have their own strategies and kind of look month to month and year to year. And I would actually argue that's probably better than just leaving your money in the index. Like if you want to index, use the US index, but I mean, you could use the US index. By the way, nothing I say here is financial advice, okay? You got to do your own research and due diligence. And I just feel very humbled, I guess, by how markets, what the reality of the markets are, and the rest of the world. And the rest of the world is the majority of the world, right? US is only like 350, 400 million people out of 7 billion or more. So we're just a small fraction of the world population and are not representative as to what's going on overall in the entire globe. All right, I'm going to leave it right there. I don't know if that helped at all, but if you're in any of those countries other than US, feel free to write a comment and let me know, like, do you have home country bias? Do you invest in your own country index? And is the most of your money located there, and how that's treated you over the years? I'm really curious to know. All right, I'm going to end right there. Peace out.